Good morning, traders, and a very happy Monday out there to everyone. Hope that you all had a nice weekend there in store and are all ready for this week coming up in front of us here. And just before we go diving into our charts here this morning, just in terms of our economic calendar, it's good to take into account that we are nice and light on the board today. In other words, no pressing major economic figures that will be due out during our U.S. morning session. Really, only thing on the board there is that we have Member Daly speaking later on in the day, and even that's listed as mild impact there. So, fairly clear cut in terms of any pressing economic data. And with that said, we're going to come over here and take our daily charts into account, at least for starters here. Of course, this is going to be our daily chart of the S&Ps, and the blue box down below on the oscillator just indicating that we have been having our consecutive closes on one side of the daily 5 SMA up until the close there on Friday, where we had done some testing and closed briefly on the other side of it. So our low on Friday was 55.19 and we proceeded to close at 55.34 and a quarter. So in the overnight session, the Globex range, if we would, kept it relatively contained. We did give it a nice test, a thorough test at that. Overnight low being 1975 and that Friday low being 19 even. So essentially a double test or a double bottom that we've been able to put in there on the daily visuals. So of course that point will also be a good primary point of interest for us. If we take the top of this 3-day consolidation phase that we had in the S&Ps, it also lines up fairly well with the bottom of the bar from these past 2 trading days, right? 19.5, and then we traded down to 17. So all throughout this area, the 55.19 has been traded through and is the tail from 1 bar on the upside and 2 bars to the downside. So a very valid data point there for our purposes. Outside of that, in terms of the daily composition here, the location of the daily 5 SMA here currently coming in at 55.44. So we'll certainly want to see how we orient ourselves around that point. For now, we're still slightly beneath that of the daily 5 SMA, and we're just consolidating and doing some holding here at the top of the previous consolidation phase, or where we had formed the 3-bar balance mode before, thus having a range expansion bar to the upside. Where we will see it in more detail is over here on the 120-minute time frame here. We'll grab our little drawing tool. So we see we have numerous spike tail highs inside of that area, right? The 1775 through the 18 zone. We had a range expansion up through the zone. Then we came down there and tested on Friday, as well as tested in the overnight session. So now we have kind of 3 to 4 data points in this region, making it a quite important zone there for us. So certainly would like to have that level on the sheets. In terms of areas of interest, right? If we were to hold and sustain ourselves at all, in terms of points there, we do have, which we fell short on, doing too much work there on last week, but the 55.50 zone. Simply because if we drop it down to a lighter time frame, right, we know that we had selling pressure into the zone before, thus having a counter-reactive lift up towards that point. So back to the 120-minute display, these are the levels in color, kind of our more substantial points of interest. 1775, once again, you could just call it 17 even since we did have several tests into that zone, so we'll leave that as a yellow line, kind of denoting its caution, right? And then 55 to 50 would be an upside hurdle, right, if we're following along with the oscillator composition. But for now, good price bar overlap, a nice consolidation phase, and just kind of testing on both sides here of that daily 5 SMA as far as our S&Ps go there. All right, and then moving on along here, we have our DAX future. All right, DAX on a tad of a different rhythm. We had a relatively decent showing on Thursday of last week, getting the range expansion out from balance. We know we had broader damage that was done, so we have the DAX working on improving or healing itself. Here with the DAX by nature, we'll have that 20-period EMA on the daily chart, continuing to drop and flatten out. So here with the DAX, as we work on getting some counter reactive lift here, 18,554 will be that 20 period EMA on the daily chart. And still, even if we get up to that point there in the DAX, we still have quite the overhead that we would still be dealing with. So we're not quite out of the woods there with the DAX future. As of yet, that daily EMA will loom further up above, and we can see how that is displayed over here on the 120-minute time frame. If we take our previous cycle low that we had built out for ourselves between this 18,491 all the way up here to 18,548, small window previous cycle low, and start of lighter developed zones there for the DAX. So we'd be running into some overhead, and you can see how that ties in with that 20 period exponential on the daily chart. So that's what we're coming into the session with on the DAX side of the spectrum there, and then of course our ES respectively. Then we'll move on along. We have the currency group here next in the mix here, our euro currency. And as we know, the EC had 2 days of high to low, finishing off the week, meaning, 2 red bars down. And very interestingly, the way that we came down also, kind of like the S&Ps in terms of testing these areas more than twice, right? 3 data points, if not more. So here in the euro currency, a spike tail low. We know we traded back there not last week, but the week prior, and then at the tail end of our most recent week. So 1, 2, 3 tests, all coming in pretty much at the same data point of the 7150. So for starters, of course, that is a bigger area of interest, speaking solely off the daily bars in and of themselves. Currently, we're already back on the other side of the previous day's high, so we're working on trying to form some price bar overlap here on the dailies. If we don't quite take out the 2-day high that looms up there, we would form ourselves 3-bar balance mode going into the following day's session, and we'll just put a yellow line here on this 7150. Since we've tested it so many times down there, that would be a caution zone for us. So whilst we're having some counter reactive lift, we'll have overhead there, the 2-day high there, or Thursday's high, right around the 1.08 handle. That will provide us a hurdle there to deal with, and then we can come in and inspect further on the 120-minute visual. Same idea with the 7150 for starters, right? 1 test, 2 test. So back up inside this zone here, we see that we did put in a nice amount of work. So as we run in here, we would just be dealing with overhead or previous reaction high around that 1.08 handle, which is very similar to the composition on the daily display as far as that euro currency future goes. Alright, so we'll keep those in mind there. Just for a side note, just for the record here, this was an instance where we really had the up Asia, or like starting up into the Asia and up Europe. So we have had quite the degree of trendiness already overnight. So this euro currency would be coming into the session with a gap from where we closed on Friday. So I'm sure we'll see that on that market profile visual there as well, as far as the euro currency is concerned. Alright, and then we have the gold. The gold had the sharp up on Thursday, sharp down on Friday, departing from the range, look above that high briefly, reintegrating back inside the core of the price bar overlap here in the gold. We can envision that as being a tiny, like a bit of a volume though, just since we've spent so much time in here. Oftentimes after we get the sharp up, sharp down, oftentimes we do try and come in and fill out some broader range, which could very well be the case there for the gold. Since Friday rather was a high degree of trendiness, what we can also consider is if we want to consolidate any of that damage that was done, kind of in like that Z-Day type of format. However, here with the 120-minute gold, we blow it up nice and large here. We take our tool in terms of the 2335, just rounding it up a tick. That's your 1 data point, 2 data points, and then we've been kind of slicing back and forth through that. So viewing that to some degree as being an over and under there for the gold. So we kind of landed there slightly beneath it on Friday's trading. So we've been consolidating some of the damage that was done there with that of the gold. However, blowing this up a notch. Once again, I like to have this 120-minute spanned out enough because that's where these two separate tests come from. So if we blow it up closer, we start to lose the touch there. So like starting with that visual, and then we could see as we blow and scale it up and zoom it in a little bit more, this shows the nature in which we had our loss of momentum at the top. Right, we certainly had our range expansion bar to the downside, and this just shows up as the appearance of a bit of a bear flag to us, right? Counter reactive lift towards the moving average, working on, swinging back down. So that previous day's low still will be of good value there in the gold. This comes in at 2329.2 in the case of that GC. But that 120-minute time frame should serve us quite well there in terms of noting some of the damage that was done and the nature of our counter reactive lift keeping itself beneath the 50% point of Friday's range expansion bar to the downside. Alright, and then we have the crude. Crude is interesting because we have that behaving a tad more similar to what we have in the S&Ps, because the crude as well, the blue box down here on the oscillator, just indicating that we are on the extended run to the upside as we had been in the S&Ps. Here with the crude, however, we have not gotten our close back on the other side of it. We did do some testing overnight around that area. It's coming in at 80.68 for this crude. So good persistency of trend for it. We had one pause bar of red on Friday, tested back on the other side of the daily 5 SMA, and to boot here, right, we're keeping ourselves propped slightly above this pivotal 80.11 mark there for the crude. Still like viewing this as being an expanding pattern in terms of, or a megaphone, right? The expanding higher highs and the expanding lower lows on a bigger daily basis. However, what we can note here, we're still getting our consecutive closes on one side. So should we close below the daily 5 SMA at all, that would be flagged on the sheet. But as opposed to really getting a close down there, we tested, held, and now we're back inside of Friday's bar. 120-minute display, another one where we have to really blow these things up there to get enough data into the mix. So we know how we've came about this high test, a bit of that 1, 2, and 3 pushes up. So we've been having our nice complex correction. Here's that same 80.11 mark that we were seeing on the daily on the intraday, previous cycle high. So we came back overnight and held ourselves just ever so slightly above that point. So inside of this area here with the crude, we've had our good counter reactive lift. So just noting we do have some congestion that we would be dealing with there. So it could be more of a rotational day for the crude. If we run up into that overhead, we could do some pause and rotation, but overall relatively constructive still there with that of the crude, and would be monitoring for when the stage does come where we would get a close back on the other side or below that daily 5 SMA, just since that would be flagged on the trade sheet. Maintaining its own for now between the hourlies and the 120-minute charts. I think those should serve us well enough to be able to monitor it with some better close detail. Alright, and then last but not least here, the 30-year bonds starting to slow a notch in their tone. Higher degree of price bar overlap now on the daily charts. One of the very few groups that we saw actually closing in balance. Right? Most of our other groups had gotten a better expansion or breached the 2 days range. So bonds were one of the few exceptions. Kept it contained in the form of an inside range bar on Friday's trading. Right, so we're coming into the session as breakout mode with the bonds, and as we can see so far, they've kept themselves aptly contained. No overwhelming range expansion for them as of yet. What we do have, however, are plenty of areas of interest, including this 119.07, almost like those S&Ps, right, where we have one data point, two data point, and then a whole previous congestion zone through this area. So 119.07, a fairly key zone there, or a support zone for those bonds. A caution zone, a bigger picture that is, would come in at 118.19. Right, if we had some larger range expansion, that area would be of big caution area simply because we didn't do a whole lot of development down beneath that. So if we were to come down towards that point, that would certainly not be a very constructive item there for the bonds. But clearly that has not been the case as of yet. We've been just holding and maintaining our advancement that we had to the upside when we were doing the one time framing mode, our 4 days of green bars up if we would. And now we're just starting to see that back and forth, right? The red, green, red type of sequence there, just indicating that the market's starting to catch its breath there, or just starting to balance after having a well-established swing to the upside, if we would. And then lastly here, just because we have it on my or have it on the sheet here, I have a little star next to it. Would be those of the boons. Similar activity there, nothing really major standout. We'll say they're a tad on the weaker side. So here with the boons, just to note, right, we did not make any type of new high on the 240-minute display for them, so they failed, in other words, to make the full retest up. If we go to the 240-minute chart, right, so this yellow line here, 132.02. Would be like the caution mark in the boons, just as far as comparing them up against what we have in our traditional 30 years. Alright, and with that, we'll bring back these S&Ps into view. Once again, in terms of our data points, 1 test, 2 test, 3, and almost 4 on that 120-minute data, so that makes that particular zone quite valid there for our purposes. And we'll get these items back and adjusted here and see just as to what we have lining up here for this morning session coming up in front of us here.